Ladies and gentlemen, welcome back to Data Dispatch and welcome to the year 2025. I wish all of you guys a happy new year. Thank you guys so much for watching, being on this journey, coming out with some of the most important data that you need to know about a lot of the stocks that we're reporting on, specifically what we've been talking about throughout the year, Palantir Technologies. We're going to be talking about that in this video going into 2025. Also, what the Wall Street is expecting in terms of the broader market. The S&P 500 has now came off of two very good back-to-back years in terms of a percentage return. The NASDAQ has also been doing very well. Palantir had an astronomical year. We're going to be getting into the details about what could be coming up next earnings. And one thing that I do want to talk about, considering that Palantir was the leader for the S&P 500. If you're a new or returning viewer, subscribe for daily videos. We're growing rather fast. Let's try to get to 22,000 subscribers. Hit that like button. And of course, not a financial advisor, collecting all the data and dispatching it to you. Now, in the overnight hours on Robinhood, Palantir Technologies is up about 1%, 0.4 cents right here at $76. Now, one thing that I want to talk about, Palantir, remember, closed actually in the market last trading session at $75, down about 2%. We saw the broader market that came down a little bit. In the overnight hours, we see Palantir that's kind of increasing a little bit, but not making a ton of price action right now as we speak. One big thing is, where does Palantir here go in 2025? And a lot of people are talking about the next earnings, which is going to be due around February. Now, Palantir has had a decent amount of consolidation here in the mid-70s, which is, I think, an important price area considering the actual accumulation that we've seen in market capitalization within the last year. Palantir is like up over 300%. And a lot of people are starting to talk about this upcoming SARs expense that could cause a miss in the next earnings per share. In terms of that, that's sitting at around 11 cents right now as a prediction for the next quarter earnings. And what a lot of these people are saying in terms of this article is that this is not being accounted for in the actual revenue estimates for the next earnings because this is unrealized. So we're going to be getting into what this article is talking about, what the potential could mean here, and also another interesting article talking about Palantir's price levels after it is the number one leader of the S&P 500 for 2024. Now, anything we talk about here, of course, I am still a bull on Palantir regarding its fundamentals. We're talking about price action here. If we see a little pullback, that is just better entry positions for people that have been sitting on the sideline. So just because I talk about possible things that could bring down Palantir, it's more about being realistic, looking at some of the things there, and not just being one of those moon boys that's saying everything just goes up, 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 up. But this is the summary from the Seeking Alpha article talking about here. An upcoming $120 million SARs expense will likely cause, they say, a significant earnings per share miss that is unaccounted by Wall Street. And this person, the author of this article, gives an intrinsic value of Palantir about $55 per share, which is about 32% downside from here. We know Palantir has done incredibly well. One thing that they do want to look at, though, is looking at the stock-based compensation that they give to their employees. And specifically, the SARs is known as stock appreciation rights. Stock-based compensation, SBC, as we know, is a way that we've seen across, especially with tech companies, as a way to attract people and attract talent to different types of companies, especially more can be different companies that could have a lot of potential because that stock could be worth a much larger price in the future. However, a lot of people aren't familiar with the intricacies of the different types of stock-based compensation. There's different types of that. Basically, SARs is one of them, the stock appreciation rights. And of the total SARs, they're saying there's about 120 million of unrecognized expenses that would be accelerated if the market condition is achieved earlier than its derived service period. Now that sounds like a whole mumble jumble. So just breaking it down here, what really are these stock appreciation rights? Long story short, the weighted average fair value for the SARs that basically have been issued is $50 per share. And this is the type of employee compensation that is based on the increase in the company's stock price over a set period of time and is unlocked within a set stock price range. That's the stock price range right here. This fair value, the weighted average right here, is issued, like I mentioned before, at $50 with a maximum appreciation of $20. In short, really what this means is the window for the SARs to be unlocked is above $50, and the fully appreciated 20 over that is at 70, meaning that beyond 70 there is no reason not to exercise them because there is no more appreciation in the actual SARs. At the time of writing, Palantir, as we know, is at about $80 right now. It's at 76 as we speak, meaning that all these eligible SARs, they should have already been exercised, as there's really no point of waiting for a further stock appreciation, and they probably want to capitalize on this maximum appreciation of $20 here. For example, if it were to drop beneath $70, it would only be less than that $20 for the maximum appreciation. If it was at 65, you'd only get 15. So it's above that maximum appreciation. Wall Street is not taking these SARs into account for their estimates. And if we look at Seeking Alpha's consolidation estimates, which I just showed you before, not a single analyst has revised down their earnings per share estimates. We see the earnings per share revisions are 12 in the bullish direction and 0 in the bearish direction. On top of that, you also have Palantir being the top S&P 500 performer this year. Some of these articles talking about if we see a pullback, look for these different support levels. Look at the 66, 45, 29, but hey, bullish price target could be 145. Nonetheless, this article saying, hey, we don't know where the heck that thing's going. But shares are up 350% on a back-to-back year of the S&P 500 doing very well. And what people are starting to talk about, what this article here from Investopedia is talking about, is this shooting star technical pattern. This indicates a potential consolidation. Since breaking out from the month-long consolidation, they've seen, and especially the election in November, that Palantir had continued to track sharply higher into the shooting star type pattern. And the last time that the similar pattern was formed, late in last July of 2024, the stock had fell 21% over the last following weeks. So they're talking about here, there's a lot of things that are signaling that Palantir could be due for a pullback, especially with these SARs. Now, of course, this doesn't necessarily mean it's going to happen, but the risk for downside potential right now is recently high. Personally, I probably would not be getting into a position if it was myself trying to make this decision at this price target. Of course, if people think it's going to go up into the bullish direction, it's all depending on your own due diligence, your own research. What do you think the price is going to be in the future? And especially, what's the time position? Are we talking 3 months? Are we talking 3 years? Are we talking 13 years? Because that could really have a big justification on the reasoning behind what you think Palantir is worth. So, want to point that out there. What do you guys make of that with the SARs? Do you think that will cause an earnings per share miss? I saw you guys talking about this down in the comments. I thought we should address it. It is a decent concern. I think that should be acknowledged, and it will be interesting to see what can happen with that, depending on how that's going to affect the net revenue. What to expect in the market and what we saw with the market opening. Wall Street's still predicting a bullish market. A strong economy here, and that's because the declining interest rates in the boosting, hoping for the corporate earnings right here, talking about the gap between the Magnificent Seven, because they had a very good year 2024, and the rest of the market is expected to narrow, which would be good, so that Magnificent Seven does not have too much of a weight on the broader indexes right here. A lot of people are going to be looking at small cap, mid cap stocks performing due to the lower interest rates. Borrowing costs will be cheaper, and these companies do need access to more capital to help expand their businesses. And you're also going to see easier regulatory environment under the new administration. So we're talking about here, hey, there could be more volatility, but Wall Street right now is expecting the market to continue to do well and profit to continue, especially with the AI trade is continuing to develop and expand at a rapid outpace and that they see the AI build out and adoption creating opportunities across multiple different sectors. So we'll be looking at different things. The IWM right here we'll be looking at, it's actually had a decent pullback. These are the small cap stocks. Will this get back up into the 240s? It could possibly if we continue to see bullishness into 2025. What are your predictions down in the comments with Palantir, with the SARs, with earnings, and of course, with 2025 for the market? Peace. I'll take care and I'll catch you guys later.